What's up, guys? So I'm coming on to talk about the VIX and then the positions, and then I want to talk about more trouble that I got onto in Twitter. So I think I have to take a self-imposed break from Twitter to keep from getting into trouble. But we'll talk about that and more coming up right now in the Short Vol Show Live.
You're watching Famous on YouTube.
All right, another interesting market yesterday as we initially sold off, continued to sell off, and then about 10 o'clock, the Fed started talking, and the market just didn't like it, and so we kind of rallied. So then I'm saying it backwards because I'm talking about the VIX. The VIX initially sold off and the market rallied a lot. Then the Fed came on and the market didn't like what the Fed said. So the market sold off and thus the VIX and VIX ETPs rallied yesterday. Let's take a look quickly at the charts to illustrate that, and then we will I want to talk a little bit to you about the level of volatility right now and what that means for our possible positioning here. Let's see. So let me get out of the way and we'll take a look at the charts so we can see, and we need to back this up because this is just an hourly. But if we go to the 5-day here, we can see the price action. Let's see, Tuesday, Wednesday, So yesterday, yesterday's this chunk right here. Let me see if I can widen that out a little bit, where we have this this rally on the open and then the sell-off, and then the kind of rally back and kind of sideways movement ever since. Currently, we're up 11 on the E-minis, and there we sit. And for me, position-wise, I kind of covered my position coming into yesterday. I did get a little long volatility once volatility moved down in the early morning, and then sold that back out. So essentially my position, I did lose a little bit of money on the open yesterday and then made it back on that little down move in the VIX later in the day. So, but very small positions now. I think I'm long 100 deltas in UVXY coming in today, which is going to slightly go against me as we're down 80 cents right now. But I feel more comfortable kind of being long a teeny bit of volatility than short. I was considering putting on like a long-term short yesterday in VXX, and I think that will eventually work, but I suspect we will get a better entry point for short vol. Now, to the title of our video today, talking about the VIX, where should the VIX be? Now, anytime you may have a discussion about where some financial thing should be, there's a kind of a obvious argument to say, well, it should be right where it is. And of course, you can't argue with that. That's where it is right now. But we're more concerned with where is it going from here in the short term, medium term, and long term, because that is of interest to us trading volatility products. Now, there are many people who are going to work the trade of just getting short these at some level and riding them down. And that will eventually work over time. But in the meantime, we want to know what's going to happen in the next day, weeks, and whatnot. And I think we can make an argument for the fact that really this is a reasonable level for the VIX to be at right now. And the counterpoint to that is that with the market at this level before, the VIX was much lower. So let's take a look at a couple charts and we can kind of think this through a little bit. Let me get out of the way here and let's take a look at the VIX overlaid with where the S&P was. So if I go to studies here, I can add a comparison with the S&P 500, and we know already that the VIX was lower with the S&P where it is right now at some point in the past. Now, does that, and the thing I'm speculating here is that doesn't necessarily mean that it's going to go way lower than where it is right now, just because it was lower when the market was at this point in the past. We were in a different set of circumstances in the past. And let's see, does this help us here? Okay, so here we go. When the S&P was up here before, let's say 3,200. Well, right now the SPX is 3,100, right? So let's say 3,100. So looking to 3,100 before, where was the VIX? Well, it was down at 10. So this is why, people are like ready to lay into the short, because look, it was way down at 11. Right now, we are at a VIX right at this moment of 32. Right? So 32, it shows 30 here. I'm not sure why it shows 30, but it's not the total end. 32, right? And thus, there's speculation, well, this shouldn't be 32. This should be way lower. It should be like 10 or something. Another way of judging this is how much has this stuff been moving around? What is the actual realized volatility? Remember, the prices of the VIX is based on option prices in the S&P 500, the SPX, right? If we pull up SPX, we can see where the VIX comes from, right? We go to options, we look 30 days out, and that's roughly going to be the option price level of the SPX 30 days out is roughly going to be that of the VIX. So we go 30 days out here. It says 32.67. Right? Very close to the VIX. The VIX is 32.89. And the question is, well, all right. So the options are saying that the SPX is going to move around at about a 32 volatility. How much has the SPX actually been moving around at? Let's take a look at that. Well, it kind of depends on the day, but if we look, if we look to, let me clear us out here a little bit. This is showing, up in March, it was up to 100, right? It's calculating the volatility at 100. It has it going down as low as 20 here, and right now it's showing 28 is how much it's moving around. So if it's moving around at a 28, then anticipating that the VIX is going to go to 10 doesn't make sense. If we keep moving around at a 28, then 10 is too low. Indeed, if we look back last year when we had this kind of organized rally, we can see, well, yeah, back last year when we hit 3,100, stuff was moving around less than 20 vol. Down here, the number, it's so tight at the bottom of this chart that you can't even almost tell the difference between 20 and 10 that much, but it's definitely below 20 here, how much it's moving around. Last time we were at a 3,100 in the SPX. So it made sense for it to be at a 10 back then, but it doesn't make sense for it to be at 10 right now. Now we see it coming down here. The trend is down since obviously this big spike that we had back here. That affected the historical volatility a lot, right? It went cruising up to 100 and it's been coming down since. However, that doesn't necessarily mean that it's going to continue to move lower down to 10. We can see it kind of evening out here. And if we kind of move in a little closer on this chart here, we can see, all right, it looks a little different there. If we kind of close up on this, we can see, okay, well, it's kind of stopped around 20 something here and it's moved back up. So according to this, historically, the prices haven't been that off to have the SPX at around a 30 vol for options, because look, it kind of bottomed out here around 19.17 or 20, and now it seems to be heading back up again. So this is the kind of analysis you kind of want to do when you're looking at the VIX. So being fearful that like, oh no, I don't want to be long at 32 vol, or either A, or B, I'm missing out if I don't aggressively short this 32 number here, because last time we were up at these levels it was a 10, so it's definitely going to, there's huge pressure pulling this lower. Well, not really. What creates pressure to pull this stuff lower? Well, when we think that the VIX is based on SPX options. Okay, well, it's those guys that own SPX options. Someone comes in, they buy SPX options. For simplicity, let's say they buy a straddle. Okay, if the market's not moving around at all, they're going to say, well, next week I'm not going to buy a straddle, or this isn't working, I need to get out of it, right? Conversely, if this stuff keeps whipsawing around, they're going to say, this owning these options is working. Maybe I'll accumulate a little more, and we see the VIX move a little bit higher. Little hints. We know that the VVIX here is up real high. 143 is a high number historically for the VVIX. Let me clear out the rest of the studies, and we'll look back a little bit at the VVIX. But 140 is high. Obviously, we are in a range that's higher than normal here. We're still kind of coming off this spike. But look, this has been another spike in the VVIX. And this is important stuff. And now I'm one who usually downplays the VVIX. If you look back historically, it was kind of like bouncing around this range here between 80 and 100. And it didn't seem to really be all that significant. But now that we're at this extreme range, however, and I've shown you how we can look at VIX options to see where these VVIX numbers are coming from. Is it coming from out of the money call buyers or put buyers? But regardless, we see a higher number here. Now, we've learned a little bit lately that, volatility can be to the upside as well as the downside. We've seen these markets rip to the upside. And certainly, if you're somebody who comes in and buys SPX calls and then you make money on your calls, you buying those calls is going to have contributed to some small extent to the VIX moving higher during that period or not going down as much. And if you buy calls and it works, and then you buy calls another time and it works, that is contributing to the VIX staying higher. And that is contributing to it not being such a great sale for these VIX products. Now, we have noticed kind of a matter of factly that the VIX futures are back in contango, and if we pull up the chart, we can illustrate that. And that is something that's significant that it's in contango. However, this is a small number, and it's having a small effect because the term structure has been moving around so much lately that it hasn't been consistently in one state or another. But and actually, we are shown right now in backwardation again. I believe we closed in contango yesterday, but we're in backwardation right here with the front month future being the highest future of all. Now, we still have this dimple out in October, but this is, I believe it did close with the futures, the front month future slightly lower than the second month. However, these effects are very, very minor one way or the other right now. So I wouldn't read too much into that. The case I'm trying to make for you this morning is there is no real reason for it to be in a hurry to be shorting volatility right now, in my opinion. Stuff's been kind of moving around. Yes, if you'd shorted volatility a couple times recently, you would have made some gain. So if we look at the week last week, or let's go to the 5-day, maybe 10-day here. Yeah, even 5-day. You could have you sold some UVXY at 48, and now it's down to 37. So it's down $11 from the high. But that would have taken some pretty good timing. You would have had basically the close on Thursday. Is that Thursday or Friday? I can't tell. But you would have had this whole session here, the open on Monday, the close on Thursday, anytime middle of the day Friday, or the open on Monday to short it, and you could have realized some gains. Yeah, it would have been hard to hit the absolute high of 51 because it was only there for a second, but you might have been able to reasonably say shorted a 46 and bought it back in 38, something like that. However, where we go from here, it's not clear that this is there's tons of pressure for this just to go lower from here at this moment. Look at, we see the E-minis kind of having a difficulty rallying right now. And I would recommend you go check out Theo Trade and them talking about volatility boxes. It's interesting stuff. I'm not an expert on what level is resistance and support and this kind of stuff, but it just seems from empirically looking that it's there's been kind of a struggle for this stuff to move higher. And now that we've had that, we had that slap down, and the market was cruising straight up, and then they just slapped it back down. And ever since we've had that slap down, people are a little less willing to kind of just chase this stuff all higher. It all moved up, and it was like, bam, rejected. And so I think people are a little bit more cautious right now about jumping on the fear of missing out stuff. Let's look at Tesla. Tesla, it's amazing that it's gotten back to 1,000, but the last couple of days, it appears to have kind of struggled to get much above that 1,000 level. And it seems like people are having an increasingly difficult time justifying jumping into Tesla and purchasing that, that $1,000 stock. We can see here, last couple sessions, it made these big moves from 800 all the way up to here, and it's kind of struggled since then to kind of maintain above 1,000. And that makes a lot of sense to me because obviously this is a popularity contest stock and it's a monster, and it wouldn't surprise me if it went to 2,000 in a month, but at the same time, it's had a huge comeback. This thing came from 375 all the way back to 1,000. And now that it's kind of reached the goalpost of 1,000, it's like, well, where do we go from here? How many people actually want to add to their Tesla position above 1,000? I think people are less willing to do that since we've had this kind of like come down from the top here. And stuff isn't always related to like the political situation and the situation on the ground. We know that the market has largely ignored the situation on the ground. However, this date to me in July, when that extra $600 a month that so many people are receiving ends, and the uncertainty about, we're making new highs in Florida, Arizona, and Texas, and I believe even California in new COVID cases. And so with that kind of looming out there and the end of the stimulus stuff kind of looming out there, people are a little hesitant, I believe, to bring this back up to the highs in the market. And I think that is that's the market acting a little bit more rationally than it has been lately. And it feels to me like this level of volatility of 30 or above feels justified for the moment. Now, this is the kind of thing that could come out and bite me because, next week, all of a sudden, vol goes back to 25 and I appear like a fool. But from the most information I have right now, it feels reasonable volatility in this level. When it pops to 50, it feels to me kind of like a sale. But when it gets back down, I feel like that 25 level is really a bottom there. And I would not be surprised if we traded in a range between 20 and, let's say, 35, 40 for a while now. And so you have your range. Vol pops to 50, maybe, start to craft together a position of a short. Vol gets back down to like 20. Well, maybe even consider like a limited, buy some call spreads to get long and trade it within that range seems to be reasonable. There's opportunities created by this market where nobody knows what's going to happen. Now, nobody ever knows what's going to happen. However, we've had these big moves lately. And when you've got stuff that's making big moves, when you have a big range, a stock that's in a big range, the market, NASDAQ, whoa, everybody's buying it, everybody's selling it. Those are the opportunities when even smaller traders can get in on the action. When something makes like a 10% move in a day, and, especially with options where like if you're trading options, you're picking these strikes, and certainly it's hard to make like a 50% move in a stock that's rarely ever seen. Even a 10% move in a stock is rarely ever seen. But certainly if you're picking in TV or in UVXY the 40 and the 50 strike, it is certainly reasonable that this thing can move 50% between the 40 and the 50 strike, or between the 40 and the 30 strike in one day, and that creates opportunities. So we have to capitalize on the opportunities while they're here right now, because the market could certainly, maybe stuff gets better in the next few months and the market goes back to this boring, like slow up every day. And we're going to look back and say, that was my chance right then during the middle of the summer to make the real money that is going to carry me for the next 6 months, 2 years, whatever. So when there's a great opportunity to make money and you miss it, it really is something that's missed. And these times where we have volatility like this is what traders look for, and we have to try to capitalize if we can on these moments. All right. So anyway, so on to so for me, very small positions. I have a small position in UVXY right now, which is a long position. I did buy some call spreads on the down move yesterday, where I was buying. The UVXY right now is 37. I was buying like the 35 call and selling the 40 call, and it didn't work at all. It would seem like it would work. I'm long a call spread, but actually what happened was UVXY went the way that worked for me. It showed me long deltas. It went in the direction that I anticipated, but the problem is that the price of the out of the money call that I sold in the call spread just exploded, right? So yes, we went up. The call that I was long went up in price a little bit, but the call that I was short like doubled in value, because what happened was, as soon as we saw the down move in the market, they took volatility in UVXY and they took the out of the money calls and they just raised them a huge amount. Right, so calls that, like I saw a call for $1, which is mid-market, turn around, you get a little spike in volatility, and that call is all of a sudden trading $3, right? And the call that I bought against it went from $2.85 to $3.20, whereas the call that I'm short went from $1 to $2.50 in the same period of time. So the actual sort of delta of those calls, how much they moved, was way bigger than you would expect. So be really careful with UVXY. If you are going to actively trade UVXY options, remember that when volatility comes in, they take the prices way down on those calls, and you might be able to buy some and get bargains and put them in your pocket, because as soon as you get a mini spike, they just jack the prices way up. So you want to be careful trading UVXY based on that information. So anyways, just to go now, you can tune off if you're bugged by when I talk sort of kind of a little bit about social issues and whatnot. You can tune out if you want to. But there was a video, I don't know if you guys saw it, there was a video about where this guy was outside his house. He had like Black Lives Matter banner in his window, and he was on his own sidewalk, and he was writing on chalk on like the brick wall of his own house, Black Lives Matter. And these two white people came up, and this lady, she kind of looked like Chucky from the video with this weird smile on her face, and like she's like, excuse me, that's private property. And the guy he says, do you live here? And the lady says, no, but we know people that live here, and that's private property. Little did she know that it was his private property, the guy who was riding on the sidewalk. And it was funny because every time they moved the camera away from her for a second, when they came back, she was a little bit closer. It was kind of like one of those like ghost stories where like the doll is here and then you look away and the doll's like way closer. Anyways, it turned out that the guy did own the place, and that the gentleman that was with the white lady who was talking and who is like coming at this guy did work for Raymond James. And the lady in Central Park, it was the same thing. She worked for some financial group, and my comment was that I wasn't pointing my finger at other people saying you, I was saying we, taking responsibility for this myself as well in the financial industry, need to address our own institutional racism and the racism which exists in our industry. So I wasn't saying you people out there, I wasn't calling other people names, I was saying we together need to address this. Because for me, I really feel that like all this protest and stuff, it can't just be for nothing. It can't just be like, oh, that's a news story and then it goes away and nothing changes. Something has to change. And what can I do myself to help change it? Well, one thing I can do is just talk about this stuff and bring it up amongst ourselves. But somebody on Twitter was so offended by the fact that I would say that there's racism within our financial community that they wrote this thing back to me saying that, like, well, by grouping all of us together, then I'm just as bad as the problem because I'm, saying that everybody is the same in our group or something like that. And that's not what I was saying at all. What I was saying is it's fairly obvious that there is racism within finance. It's a more conservative part of the economy, the country. Certainly, the way I got into finance was through an old boy network, the elitist. From being a fraternity member at an elite New England college is how I got onto the floor, and that path to financial freedom is not available to everybody, and I'm aware of that, and also I experienced firsthand watching racist stuff happen on the trading floor, and I'm not and so my point, I thought, was a very kind of like just basic comment that there's racism in the finance industry, and I didn't think that was controversial at all. But people like jumped all over me about it, and so that's that. Maybe I should just stay off of Twitter because I'm getting myself into trouble. I am great. I'm very grateful for the conservative people who watch my channel, and I don't think that this is like a political thing to address the fact that there's racism in society. I don't think that has one party or not has anything to do with political parties. And my intention is not to call out one political party or another, but to say that this exists, and we all need to do our part to make our country more of what the founders envisioned it to be. That's all. All right, so best of luck to trading. There's 2 minutes till the open, and it looks like the E-minis are kind of at the lowest range that they've been like this whole time. Let's see. There's the chart from the last while, and somebody was saying in the chat, well, we haven't had the market hasn't crashed yet. I don't necessarily believe that we will see the market actually crash from here. I don't know if that's in the cards that we're going to have another huge down move, but I could see us just kind of grind lower to sideways and volatility come in at some point. So we'll just have to we'll have to see where we go from here. But yeah, I don't necessarily think that like we're lining up for a big down move in the market, because I think there's dip buyers out there certainly, but I could see us grind sideways for a while. Is what it is. But we'll have to wait and see what happens. 1 minute to the open. I'm going to let you go and jump into the open here, and we'll see you next time. Good luck trading today. Be careful out there. I think I'm just going to kind of stay on the sidelines here. Thank you, Justin Green, for your so much geopolitical headwinds. Yeah, there's tons of headwinds out there, but that hasn't stopped the market before. And it kind of feels like there's money out there that needs to go somewhere, and where's the best place for it to go? Not bonds. What about, the U.S. equities seems attractive to other people in the world as where do you park your money? Of all the places you can put your money, they feel like they need to put it somewhere, and a lot of people are putting it in U.S. equities, and I get that. We'll have to wait and see what happens. All right. Thanks, guys. Thanks for everybody leaving a comment in the video. You really do help out just by leaving a comment in the video or subscribing, that sort of thing. Somebody did ask what the benefits of membership are, and I would say the biggest membership's like $2 to the channel or something. I would say the biggest benefit is just like if you have a problem with your positions. I was a professional market maker for many years. You might find yourself, and this has happened to me before, where like somebody's like doesn't know what to do on expiration, or there's the bell, or they have pin risk. Something's going on with their options position. They're having a problem with their brokerage, one thing or another. They need somebody, who do you call to ask, some esoteric options question about your position? Well, I'm available to you for that kind of thing. And, as a member of the channel, you get priority with me. And I certainly am always trying to find ways that I can hook up members of the channel, because there's not a real specific list of things that you get for a membership. So I'm always trying to figure out how I can help people out who are members. And the reason I would think you would become a member is just to show that you support independent media when it comes to trading, and that's basically what it is. You get obviously a little fancy avatar by your name in the chat, but essentially it just gives you a short line to me. If you need any resources I can provide you with at short notice, I'm available to you. All right, so there we come into the open. I've already gone too long. Thanks for watching. We'll see you next time on the Short Vol Show Live.
You're watching Famous Games.
Bye now.